The Rural Funds Group is an agricultural property trust. RFF, as is the ASX code, was listed in February 2014 and is diversified across 6 sectors and invested in 44 different properties. Lessees and counterparts include ASX listed and other corporate operators such as Treasury Wine Estates, OLAM, Select Harvests and Bayada Poultry. FY18 was a good year for the Rural Funds Group. AFFO and earnings were up 26% and 29% respectively. The AFFO per unit of 12.7 cents and the distributions per unit of 10.03 cents were in line with our previous forecasts. Distributions per unit had increased 4% over the prior corresponding period, which is in line with our target growth of 4% per annum. Total unit holder return for FY18 was 20%. Thinking about the adjusted funds from operations, there were 3 main drivers for that positive result. The first is an increase in rent by virtue of lease indexation mechanisms, either CPI linked or fixed, which are included in all of our leases. Secondly, the Rural Funds Group funded and continues to fund expenditure on the Corabary Almond Orchard development, a 2,500 hectare almond orchard, which is nearing its completion. And finally, RFF acquired 3 cattle properties referred to as the Natal aggregation in northern Queensland in December 2017. Thinking about the earnings of RFF, that adds to the property revenue increases which I've just described through non-cash items, and those were primarily positive independent valuations for a number of properties within the Rural Funds Group. The Rural Funds Group has a policy to revalue each of the assets within the portfolio independently at least once every 2 years. During FY18, there are a number of positive property revaluations which occurred. Some of the highlights included 3 almond properties which the Rural Funds Group owns, which in aggregate received a valuation uplift of 8%. RFF also owns 3 macadamia properties which, while smaller in value, received a valuation increase of 37%. And finally, one of the cattle properties which RFF owns went up 17%, primarily as a result of the productivity development which has occurred on that property and therefore the increased productivity of that farm. The capital structure of the Rural Funds Group remains healthy. Gearing is at 25%, which is compared to a target of 30 to 35%, and that's a pro forma number following the equity raising which occurred in July 2018. In addition to that, we have $80 million of headroom on our debt facility, and 55% of our debt is currently hedged, with the outright level of hedges increasing over the next 3 years. In 2016, RFM as manager for the Rural Funds Group published a climatic diversification strategy. This paper outlined the intent to invest in varying rainfall zones to reduce the likelihood that our lessees would all experience either wet or dry conditions at the same point in time. Since 2016, RFF has acquired 13 properties in Queensland. For those properties, they are located in a high rainfall zone, and those lessees have experienced average or close to average seasons. If we think about the sectors in Southern Australia in which RFF is invested, it consists primarily of almonds, poultry and vineyards, and all of those assets are underpinned by high security water types. So, for the Rural Funds Group and their lessees, it is business as usual. FY19 guidance is adjusted funds from operations of 13.2 cents per unit and distributions of 10.43 cents per unit, and that's a 4% increase on FY18.